The Financial Sector Conduct Authority has published the conduct standard for banks, which aims to regulate and supervise banking institutions and to promote the treatment of financial customers. Having successfully undergone the parliamentary process, the conduct standard has been made final. And joining us in this conversation to unpack is Kedibone Dikokwe, the Divisional Executive for the Conduct of Business Supervision at the FSCA, and Adri, Grobler, the Manager of Legislation and Regulatory Oversight in the Market Conduct Division at the Banking Association of South Africa. Kedibone, just to begin with you, I mean, quite an interesting time to introduce a new law to the market when everyone is grappling with COVID-19 and, you know, how to make it out of this thing alive. Why now?
I don't recall how many years we've been trying to finalize this document. And I am very excited today that finally, as South Africans, we have the law that is looking at how the banks are conducting themselves. And as a regulator, this piece of legislation is going to help us to supervise the behavior of the bank. When a bank come up with certain products, we as the FSCA should be able to go deeper into this product and be happy that the product will meet the needs of the customers. So the timing of this legislation, yes, it's exciting, but I guess it's just a coincidence because this law took us years for us to come up with.
I suppose the saying goes, there's never the right time, right? But before we unpack the details of the new law, Adri, I'd like to bring you in here because essentially what this new standard is hoping to do is it's hoping to ensure that banking customers are treated more fairly, because research has shown that South African banks haven't always tended to do so. As BASA, how do you respond to that the industry hasn't always upheld the highest standards in treating its customers fairly?
I think it goes without saying that any company in any industry that interfaces with customers will constantly have to be on their toes, constantly have to move with the times, constantly have to meet customers' expectations. And often an industry or a company is not in total tune with those expectations and those needs. So we, BASA and the banking industry, absolutely welcome this piece of legislation from FSCA, the conduct standard for banks, and we are ready to we've been complying in many aspects. We are ready to perhaps even supersede our regulators' expectations in time to come.
Mm-hmm. Well, as a fellow banking customer myself, this is very encouraging news to hear. But Kedibone, since the news was announced this morning following the webinar, there has been quite a number of questions that we've received as to, you know, what makes this piece of legislation different to what's already out there in the form of the Consumer Protection Act to protect consumers against, you know, mistreatment from companies, or even the role that the ombudsman plays in the sector. How does this differ?
Vivi, I would say from the FSCA side, we believe that prevention is better than cure. And how are we going to prevent this disease that I'm talking about? It is better for us as the regulator to be able to preempt, to anticipate problems that could happen within a specific bank that produces a specific product. And as a regulator, we should be able to intervene to prevent bad outcomes for customers. So as the conduct regulator, we have a mandate to be intrusive when we deal with our banks and be able to preempt problems that might arise that will negatively have an impact on our customers. So if you look at the current structure that we have, we don't have a regulator until this morning, but we used to have the banking ombuds. The banking ombuds was only involved tail end of the product's life cycle. They will only deal with the customers when there are complaints. So with this piece of legislation, as the regulator, we will be involved right at the beginning of the product design. We will engage with the banks when they develop their products, whether those products will be suitable for the group that they'll be targeting. Will there be barriers after the sale point? And at the end of the day, we will also help the customers when they voice their complaints at the end.
And Adri, some of the behaviors that this new legislation is trying to put an end to are things like fraudulent debit charge orders, or consumers being sold products that they haven't been made to understand fully, or even consumers wrongfully being charged for reversals. So I'd like to understand what the banking sector means when they say that they welcome it. How will you be looking to review that conduct and make sure that, you know, an end is put to such behavior?
Thanks. So when we say we welcome it, understand that the banking sector has never really had a conduct regulator. When the Financial Advisory and Intermediary Services Act was introduced, probably 10, 12 years ago, that was the first form of conduct regulation that stretched into the banking sector. Of course, that was followed by the National Credit Act. Now, the conduct for the bank conduct standard sits within a bigger piece of legislation, which is the Financial Sector Conduct Authority legislation. And that is based on principles. So when we say we welcome it, we welcome to have the parameters, we welcome to have the inclusion of the regulatory authority within our business, walking the road with us, ensuring that we can produce the best possible outcomes for our customers. Kedibone mentioned the word intrusive. Absolutely. The banking conduct standard will look at just about every aspect of a customer's journey through the bank, from cradle to grave, if you want to put it that way, from inception, from choosing a product right through to the complaint section. But more importantly, the standard and the regulatory framework in which it sits also allows our regulator to come in a little bit deeper and to look at the corporate governance of an institution, of a bank, and to look at the culture of the bank. And I think that is a good thing, because our customers need that, our banks need that, and we now have principles within which to operate, and principles within which to design our products and deliver our services. With regard to the debit order issues, you know, that is a problem that I think it is as old as debit orders, and it's a twofold approach. As a customer, I must be vigilant to try and identify these unauthorized debits, obviously, on my account, and I need to do something about it. And within the industry, we have work underway that's actually gone a far way to try and identify these rogue operators and to exclude them from the payment streams.